Imagine a company so powerful that it can convince its users to spend 4 times more on apps than folks using a rival system.
Wow.
Even though that rival system has twice as many users, that's the kind of influence Apple wields.
That's incredible.
And that's exactly what we're diving into today.
Right. We're going to be taking a look at an article from The Motley Fool.
Oh.
It's called 4 Reasons to Buy Apple Stock. Like there's no tomorrow. But before you go all in on AAPL, let's unpack their arguments and see if they really hold up.
Okay.
We'll be exploring the strengths of Apple's ecosystem, their customer loyalty, their potential new ventures, and whether that famous brand name is really enough to justify an investment.
This ecosystem everyone's always talking about, is it really as strong as this article claims?
Well,
How much does it actually influence buying decisions?
the article points out that even though Android has way more users globally, Apple users shell out significantly more cash on apps. What's fascinating here is that difference in spending, because it suggests that Apple has created an environment where users are not just content but actually engaged and happy to invest more in their digital experience.
I see.
Think about your own app spending. Are you the type to stick with what you know, even if it costs a bit more?
I think I might be guilty of that.
Well, that's what the article is getting at with this whole ecosystem idea. They're saying Apple users like yourself are less price sensitive because of the seamless experience they've cultivated. You buy an app on your iPhone and boom, it's on your iPad and your MacBook.
Yeah.
That convenience is something people are willing to pay a premium for.
I admit I've been tempted by some new phones with impressive features, but then I think about relearning all my shortcuts, transferring everything over.
Yeah.
It's daunting.
It is.
Do you think that inertia is what keeps Apple on top?
Absolutely. It all comes down to switching costs. The more you invest in an ecosystem, whether it's apps, music, cloud storage, the harder it becomes to switch to a competitor, even if that competitor might seem better on paper. You're already so deeply embedded in Apple's world that starting over feels like a huge hassle.
Yeah, I could see that.
Think about all your music on Apple Music, your photos in iCloud, the way your messages sync across all your devices.
Yeah, okay, I see what you mean.
And that's exactly the kind of stickiness that makes investors happy. Because it translates to predictable revenue streams, less need for aggressive marketing, and a buffer against competitors trying to lure customers away.
So on top of that sticky ecosystem, Apple also boasts a 90% customer loyalty rate, which is significantly higher than Android. People really do stick with iPhones.
They do.
What do you think is the secret sauce there?
Well, brand loyalty is a powerful thing.
Yeah.
It signifies stability and future earnings potential. It's like that coffee shop with the loyalty card.
Oh, yeah.
Once you're a few stamps away from a free latte, you're much more likely to keep going back. Even if the cafe down the street has slightly better pastries.
That's a great analogy.
Yeah.
But no company can rely on one product forever.
Yeah.
Right? So where else is Apple looking to make its mark?
Well, the article highlights that Apple's exploring new ventures beyond the iPhone. Particularly in AI chips and augmented reality. They specifically mention the A18 chip, which is designed for the iPhone 16, but they suggest it might also be used in data centers.
Wow.
That's a whole new market for Apple to potentially dominate.
That sounds ambitious, but is that a realistic goal?
It's certainly a bold move. The data center market is incredibly competitive, with companies like Intel and AMD already dominating the space. It's not a guaranteed win for Apple just because they're throwing their hat in the ring.
So how do we even begin to evaluate their chances of success?
That's where you have to look beyond the headlines and dig deeper. Does Apple have a clear strategy and competitive advantage? Will the A18 chip offer something truly unique to data centers? Or will it struggle to compete with established players?
So it's not just about the technology itself. It's about understanding the market, the competition, and Apple's overall strategy.
Exactly. You have to separate the hype from reality.
And let's not forget that they've had some high-profile flops in the past.
Oh, yeah.
Remember AirPower, the wireless charging mat that never actually saw the light of day?
Yes, AirPower.
Yeah.
A cautionary tale that even a tech giant like Apple isn't immune to missteps.
Yeah.
They invested a lot of resources into that project, and it ultimately went nowhere.
Which brings us to another critical point. The cost of innovation. Developing new products and services, especially in cutting-edge fields like AI and AR, requires significant investment.
Absolutely.
And there's always the risk that those investments won't pay off.
You're right. That's why it's so important to look at Apple's financials.
Okay.
Beyond just their revenue and earnings numbers.
Yeah.
How much are they investing in research and development? What's their track record for bringing new products to market successfully?
So even though this article paints a very optimistic picture of Apple's future, it sounds like there's a lot more to consider than just surface-level enthusiasm.
There is.
We need to look at the potential downsides, the competitive landscape, and Apple's ability to execute on their ambitious plans.
Precisely. Investing is never about blindly following someone else's recommendations.
Okay.
It's about doing your own research, understanding the risks and rewards, and making informed decisions that align with your own financial goals.
But a strong ecosystem needs a strong brand to draw people in.
Yes.
And Apple's brand is consistently ranked among the most valuable globally.
It is.
Do you think that alone makes it a safe investment?
There's no denying the allure of the Apple brand.
Right.
It represents innovation, sleek design, and a certain status symbol.
Yeah.
But a brand name is only as good as the products and services behind it.
We've all seen brands that were once considered untouchable lose their luster when they failed to innovate or keep up with consumer demands.
Right. Think of companies like Kodak or Blockbuster.
Exactly.
Their name recognition alone wasn't enough to save them when the market shifted.
Right.
Apple's brand might be a powerful asset now, but it's not a guarantee of future success.
So while a shiny brand name might catch your eye, it's the substance behind it that really matters.
That's right.
And that leads us to a point that the article itself acknowledges. Apple's revenue and earnings have been essentially flat since 2022.
Oh.
That seems like a pretty big red flag, doesn't it?
It's definitely something investors need to consider.
Yeah.
Even with their dominant brand, their loyal customer base, and their ventures into new markets, there's clearly a sense that their growth has plateaued.
Yeah.
And that's where due diligence becomes absolutely essential.
What do you mean by due diligence?
You need to look beyond these surface-level arguments and really delve into Apple's financials, analyze their product pipeline, and assess their competitive landscape. Don't just assume that past performance guarantees future results.
So what are some of the key things we should be looking at?
Well, for starters, examine their financial statements. Are their profit margins shrinking? Are they taking on more debt? Then look at their product pipeline. Are there any potential game changers on the horizon? Or are they simply iterating on existing products? And finally, assess the competitive landscape. Are new players emerging that could threaten Apple's market share? These are the kinds of questions you need to ask yourself as you consider this investment.
So before we jump into analyzing Apple's potential future, let's take a closer look at this fascinating point about their ecosystem. And how much more Apple users spend compared to Android users. This really speaks to the power of creating a seamless, integrated experience.
It does.
That keeps people hooked and coming back for more.
It's a brilliant strategy, really.
Yeah.
By creating an ecosystem where your devices and services work together seamlessly. They've essentially built a golden cage. It's comfortable, it's convenient, and it's very, very difficult to leave.
Okay, I have to admit, as someone who's fully immersed in the Apple ecosystem, I totally get it. It's just so easy to stay within their world.
I agree.
But let's play devil's advocate for a moment. Is this level of lock-in potentially a bad thing for consumers?
That's an important question to consider. Some argue that this closed ecosystem stifles competition and innovation. If consumers are less likely to switch, even if a competitor comes up with a groundbreaking new product or service, does that slow down the overall progress of the tech industry?
That's a good point. It's like the old saying, a rising tide lifts all boats. If Apple's dominance prevents other companies from flourishing, is that ultimately detrimental to consumers in the long run?
It's a complex issue with no easy answers. On the one hand, you have Apple creating a polished and user-friendly experience that millions of people clearly enjoy. On the other hand, there's a valid concern about whether their dominance limits consumer choice and potentially stifles innovation outside of their own walled garden. It certainly makes you wonder, if everyone's locked into one ecosystem, does that slow down progress? It's like the old saying, a rising tide lifts all boats. But what happens if one boat is so big it creates its own currents?
Are we saying Apple is that big boat? I mean, it does feel like they set a lot of the trends in the tech world.
There's no doubt they have a significant influence. But it's a two-way street. Consumers are drawn to Apple's ecosystem for its ease of use and seamless integration, but their loyalty also allows Apple to maintain its premium pricing and control over the user experience.
So it's a bit of a chicken and egg situation. The ecosystem fuels their dominance, and their dominance strengthens the ecosystem.
Precisely. And this raises some interesting questions about consumer choice and the power dynamics at play. But let's shift gears a bit. The article also highlights Apple's ventures beyond the iPhone, even though it's clearly their cash cow. We talked about the A18 chip and its potential use in data centers. Do you think that's a realistic path to growth for them?
When you mentioned earlier that the data center market is already pretty crowded with big players like Intel and AMD, what makes Apple think they can compete in that space?
That's the multi-billion-dollar question, isn't it? It's not enough to simply enter a new market. You need a clear strategy and a competitive edge. So what could that be for Apple? Well, they could leverage their expertise in chip design and energy efficiency. They've already proven they can create powerful chips for their mobile devices. Could they translate that success to the data center world?
It would be quite a leap, wouldn't it? Going from powering phones and laptops to powering the massive servers that run the internet?
It would indeed. And it's not without its challenges. The data center market has different demands and expectations than the consumer electronics market. Apple would need to adapt their chip designs, optimize for performance at scale, and build relationships with data center operators.
Plus, haven't they struggled to meet demand for their own products in the past?
Yeah.
I remember all the supply chain issues during the pandemic.
That's a valid point. Scaling up production to meet the needs of the data center market would be a significant undertaking. It's not just about designing a great chip. It's about manufacturing and distributing it on a massive scale. And that requires a robust and resilient supply chain, something Apple has been working to strengthen.
So it sounds like there are a lot of hurdles to overcome. But if they can pull it off, it could be a huge win for them.
Absolutely. Entering the data center market could open up a whole new revenue stream for Apple. It would diversify their business, reduce their reliance on iPhone sales, and potentially position them as a major player in the future of computing.
It's a high-risk, high-reward scenario for sure. But that seems to be Apple's MO. They're not afraid to make big bets.
And they have a history of success. But as we've discussed, not every bet pays off. Remember AirPower?
Oh yeah, that was a bit of an embarrassing stumble for them, wasn't it?
It was a reminder that even the most innovative companies can make mistakes. And it highlights the importance of due diligence for investors. It's not enough to believe in a company's vision. You need to scrutinize their execution, their track record, and their ability to overcome challenges.
So as you consider investing in Apple, are there any other red flags we should be looking out for?
Well, aside from their recent flat revenue growth, there are a few other things to consider. One is the increasing competition in the smartphone market. Companies like Samsung and Google are constantly innovating and releasing new devices that challenge Apple's dominance.
It feels like those foldable phones are really starting to gain traction.
They are, and that's just one example of how the landscape is shifting. Apple needs to stay ahead of the curve if they want to maintain their market share.
So they can't just rest on their laurels and assume their loyal customers will stick around forever.
Exactly. They need to keep pushing the boundaries, keep innovating, and keep delivering products that excite consumers.
That makes sense. But innovation isn't cheap, especially in the tech world where the pace of change is so rapid. How is Apple funding all these new ventures?
Well, they have a massive cash hoard. They're one of the most profitable companies in the world. But even with their deep pockets, they need to be strategic about their investments. They can't afford to throw money at every shiny new technology that comes along.
So it sounds like they need to strike a balance between investing in innovation and maintaining their financial stability.
Exactly. It's a delicate dance, and it's one of the key things investors should be watching closely.
But even if Apple navigates all these challenges and continues to innovate, there's another factor to consider. The global economic outlook is uncertain. Inflation is rising, interest rates are climbing, and consumer confidence is waning.
That's right. And those macroeconomic headwinds could have a significant impact on Apple's business. Even if they release amazing new products, if consumers are tightening their belts and cutting back on discretionary spending, Apple sales could suffer.
So even the most innovative company in the world isn't immune to the forces of the global economy.
Unfortunately not. And that's why it's so important to consider the bigger picture when making investment decisions. You can't just look at a company in isolation. You have to understand the context in which it operates.
So we've talked about Apple's ecosystem, their ventures beyond the iPhone, their brand value, and the potential risks they face. But let's go back to that brand value for a minute. The article touts it as a major advantage. But does brand name really translate into tangible benefits for investors?
That's a great question. And it's one that deserves careful consideration. Because while a strong brand can certainly create a halo effect, it's not a guarantee of success. We've all seen brands that were once considered invincible fall from grace.
It's like that saying, what goes up must come down.
Exactly. Think of companies like Nokia or BlackBerry. They were once the undisputed leaders in the mobile phone market, but they failed to adapt to the rise of smartphones, and their brands lost their luster.
So what can Apple do to avoid a similar fate?
They need to stay ahead of the curve. They need to anticipate consumer needs and trends. They need to continue to innovate and release products that delight and surprise. And they need to protect their brand reputation by upholding ethical standards and acting responsibly.
That sounds like a tall order.
It is, but it's essential if they want to maintain their position as one of the world's most valuable companies.
So how does all of this factor into our decision of whether or not to invest in Apple stock?
Well, it comes down to your own risk tolerance and investment goals. If you believe in Apple's long-term vision and you're comfortable with the inherent risks of investing in a company operating in a dynamic and competitive industry, then it might be a worthwhile investment. But if you're looking for a guaranteed return or if you're risk-averse, then there might be safer options out there.
It sounds like there's no easy answer.
There rarely is when it comes to investing. But by considering all of these factors, by doing your research and by weighing the pros and cons, you can make an informed decision that aligns with your own financial goals.
So what would you say is the most important takeaway for our listeners?
I think the key is to remember that no investment is foolproof. Even the most successful companies can stumble, and even the most promising technologies can fail. So approach every investment opportunity with a healthy dose of skepticism. Do your due diligence, and never invest more than you can afford to lose.
That's excellent advice. So as we wrap up this deep dive into the world of Apple, what's the one question our listeners should be asking themselves before making a decision? I think the question that keeps coming back to me is, can Apple really maintain its innovative edge? They've been at the forefront of so many technological advancements, but the landscape is changing so rapidly.
That's the million-dollar question, isn't it? Can they continue to create products and services that people crave? Can they adapt to a world where AI, the metaverse, and who knows what else is right around the corner? These are the things you need to ponder as you make your decision.
It's almost like we're asking, if Apple can defy gravity, they've been on such an upward trajectory for so long.
And that's precisely why this moment is so crucial for them. They've reached a level of success that few companies ever achieve. But that success also creates enormous expectations. Can they keep pushing the boundaries? Can they continue to surprise and delight consumers? Or will they succumb to the forces of inertia and become a victim of their own success?
I guess only time will tell. But as an investor, you don't have the luxury of waiting to see what happens. You have to make a decision based on the information available today.
And that's why due diligence is so important. You need to look beyond the hype, the headlines, and the brand name and really dig into the fundamentals. Are their financials solid? Is their management team strong? Is their product pipeline robust? These are the questions that will help you assess their long-term prospects.
It sounds like we're saying, don't just buy Apple because it's Apple.
Exactly. Don't let the brand name cloud your judgment. Look at them the same way you'd look at any other investment opportunity, with a critical and discerning eye. Remember, investing is about making smart decisions that align with your financial goals and risk tolerance.
And sometimes that means resisting the urge to jump on the bandwagon, even if it's for a company as iconic as Apple.
Well said. It's about being informed, being discerning, and making choices that are right for you.
So to wrap things up, we've taken a deep dive with you into the arguments for and against investing in Apple stock. We've explored their strengths, their weaknesses, and the potential risks and rewards. But as always, the final decision rests with you, our listener.
We've equipped you with the knowledge and insights to make an informed choice. Now it's up to you to weigh the evidence. Consider your own investment strategy and decide whether Apple is a good fit for your portfolio.
And remember, the world of tech is constantly evolving, so stay curious, stay informed, and never stop learning. Thanks for joining us on this deep dive, and we'll see you next time.